All right, good evening, traders. Tonight's presentation is on using the FNGU for market direction. Today is March 12th, 2024. My name is John Kerrigan. I moderate the BYOB Trading Room. I've got a lot to go through tonight, but I think you're going to enjoy this a lot. I think when we put it all together, I believe it can probably change your trading for the better. So we're going to put it all together, and then at the end I'm going to play a video of a trade that I did earlier today. Before I get started, I'm not going to have any slides, but I will share my email address and some of my other stuff like my YouTube channel. But there will be this will be recorded this evening, so you will be able to see a copy of it in our resources if you're a member, and if you're not, you'll be able to see it on my YouTube channel. So before I get started again, let me just say, you got to do your own due diligence. Okay, any of the strategies that we use, you need to test them out before implementing them. I strongly suggest you do it on paper and paper trading before you go live with real money, because I do not want to see anybody lose money on any of our strategies because you didn't understand them. All right, so all right, good evening, Bio John, Fred N, Malcolm, everybody. Good evening. Glad you could make it. So happy you could make it here. Let's go ahead and get started. All right, so let's talk about the FNGU first. And before we start, let's define the FNGU, what it is. Okay, so the FNGU is an ETF. It's got 10 products in it. All right, and you can see these 10 products are weighted even within the FNGU. So you've got NVIDIA, Meta, Netflix, Broadcom, Amazon, Microsoft, Google, Apple, Snowflake, and Tesla. Okay. Now, why has this become so powerful? Because if you go back and you look at the market, you'll see that inside the, actually, if you look at the ETFs like SPY and inside QQQ, we have some weighted components within the NASDAQ and the SPY. So here's the NASDAQ. And these are the heavyweights within the NASDAQ. And we'll just start pointing a finger at the ones that are also in the FNGU. So we got Microsoft, we got Apple, NVIDIA, Amazon, Meta. Broadcom is not in there, but that's a big one. Advanced Micro, Tesla. That's also in there. Then you can see we got Alphabet. And a little bit further down, we've got Netflix. Okay, so if you look at this is the NASDAQ 100. That means there's 100 companies in the QQQ. And if we wanted to take a look at how they're weighted out, let me see here if I can get that open. For some reason, that didn't save right. Oh, here we are. All right, so now we're going to take this and take that off. All right, you can see the top 10 holdings in the QQQ equate to 47% of the NASDAQ. So here it is. 10 of the 100 holdings control 50% of the movement. All right, so if those 10 components, or the majority of those 10 components, are in the FNGU, you can see how powerful it is just to watch the FNGU for market direction. All right, so you guys understand that? Okay, NASDAQ 100 companies. The top 10, they have everything in the NASDAQ is weighted. All right, and the top 10 weighted right here, okay, are also, the majority of them are also in the FNGU. So just watching the FNGU can pretty much tell you on 99% of the time which way the market's going to be going. If the FNGU is moving up, it will typically drag the market up with it. So there's just the NASDAQ. Now we're going to hit another one, and we're going to take the SPY. All right. So here's the SPY. Same thing. All right. Let's take a look at the top 10 here. Let's trash that out. Okay. We got Microsoft, Apple, NVIDIA. I think Amazon was in there. Meta, Google, another Google, and Tesla's way down here. Okay. So if you add up the top 10 on the S&P 500, you come up with almost 32%. So here's 32%. We got 500 companies in this S&P 500 ETF, and yet only 10 of them, it only takes 10 of them to control 32% of the market direction. Now we could crank it up and go to the top 20, and we'll see what that looks like. Now here we go to the top 20, and you can see that here's the top 20, that almost 42% control the direction for the S&P 500. So it doesn't really matter what most of the time, it doesn't really matter what the other 480 are doing, because these are so weighted within these ETFs that they simply drag the rest of the market, or they actually just drive the market wherever they want to go. So you take the S&P 500, let's just go look at the performance of the S&P 500 today, and we'll look at the QQQ, and then we're going to compare it to the FNGU so you can see what it looks like on a chart. And you'll see that they're almost identical, because the FNGU kind of drives both of those, because they have heavy weighted stocks. Some of the securities inside there are the same securities in the FNGU, and they kind of drive the ETF in the direction that the FNGU is headed off to. So let's start off with the FNGU, and you can see the pattern here on FNGU. You can see from the get-go, we gap up, we fill gap, all right, and then we rally higher. We make a higher low, all right. You're going to see the same thing on SPY and QQQ, all right. So this is FNGU. We pull back to VWAP right there. Now, you know what I say, when the market makes a higher low, okay, there's going to be pressure on the bulls to make a higher high. Okay, whenever we make a higher low, there's going to be pressure on the bulls to make that higher high. So here it is, market comes up, ripping over VWAP, pulls back to VWAP, and then heads up higher. All right, now you're going to see the same thing happen on SPY. All right, gaps up, same thing, right? Pulls back, fills gap, and then rips up higher and comes back to VWAP. Again, when the market makes a higher low, what do I say? There's going to be pressure on the bulls to make the higher high. And here we go, back off, headed back up here to challenge the prior highs right here. Okay, so there's SPY. Looks exactly like FNGU. All you had to do was watch the FNGU, and you could see the same thing was happening in the SPY. All right, so let's take a look at QQQ. So here's 10 stocks where you don't have to watch 100 in the NASDAQ or 500 in the SPY. All you pretty much got to watch is these top 10 stocks that are in the FNGU, or you just watch the FNGU ETF. So now we look at QQQ. Same thing happens. Gap up, fill gap, rip up over where we gapped up to, pull back to VWAP, and then back off to challenge the highs. Same thing over and over. Now you watch and you pan this out. You can see QQQ. All right. Take a mental image of that, and then I'll put in FNGU. And you can see they're almost identical. Okay. Just like that. SPY, almost identical. Same thing. Right here and all the way up. Okay, so using the FNGU to determine your market direction can help you. And if you want to take a look at XLK, let's just go back and review XLK. That also has some of the same components in there. Here we go. All right, so here's the X. That's not the one I wanted. I wanted the one with XLK. All right, here's the top 10 for XLK. All right, so these are the top 10 weighted in the XLK. Apple happens to carry 24%. Microsoft carries 21%. NVIDIA, this is all in the XLK, carries 4%. You've almost got 50% tied up just in the top 3 of the XLK right there. Almost 50%. I would say that is 50%, really. Just 3 stocks right there. You can see here's Broadcom, Cisco, Salesforce. These come right out of the XLK. Let me see if I can pull up a chart for that, or I have something for you so you can take a peek at that. And the weighted stocks, and I wanted XLK right here. All right, so here's XLK. You can see Microsoft 22.23, Apple 18.29, NVIDIA 7.32. You can see watching these big ones right here can pretty much tell you where the rest of the market goes. So just by watching FNGU, you've got a leg up on which direction you want to trade. Now me, I like to trade options on the ETFs like SPY and QQQ. All right, why do I like trading those options? Because I can leverage my money. So here earlier today, I bought 10 contracts at a location as price came up. Now I bought 10 contracts. Each contract is 100 shares. Okay, each share was worth at the time. Well, this one's worth $5.12, but the shares were trading at $5.15. So I got 10, and I got 10 more. So you can see right there. That's 2,000 shares. Because if 10 times 100, it's going to be 1,000. So that's 1,000 shares. Now if I take 1,000 shares and I calculate that out. Let me get my calculator here. 1,000 shares. All right. So you can see right here, 1,000 shares times 515. All right, is 515, half $1,000,000. Right. Now I got 2 groups of 10, so I'm swinging. I've got control of $1 million worth of SPY for a price of 9,390. You see that? There's 1,000 shares here, and there's 1,000 shares there. So SPY was trading at 515.50 right through here. When I took the trade, as price came up over that red candle, okay, so I've got control of 2,000 shares, which equates to $1 million worth of SPY, and I'm able to control that for a small amount of 9,390, and that's how you leverage your money, is by trading the options. Now, I like to trade options that expire on Friday. Why Friday? Because I got more open interest. And not only that, I also like to trade options that are 50% of the 10-day ATR in the money. So when it was at 515 or 514 or so, I wanted to be $2.50 in the money, so I picked up the 512 calls because I wanted to go long. So as you can see, when you have the right direction, all right, you can make almost 20% in a matter of 2 hours on your money. Okay, almost 20%. There's 1,800. Okay, what did I have vested in this trade? 9,390. Okay, so we can take that 1,800 and divide it by 9,390. All right, you can see almost 20%, an almost 20% increase, all right, gain in a matter of 2 hours by leveraging my money. And that all comes from what? Getting the direction right. Okay, so how did I know it was moving up? So when I checked on this, I have I set up my indicators. I've got a couple of indicators. I've got this one, T2122. We were in the buyer's chop zone at the time, so that was not helping me out. T2123, which measures all 7,000, 6,000 stocks in the NYSE. That one was helping me out because we had a pullback to VWAP, and then we started to bounce away from it. So this one was helping me out, but the big one that I'm really interested in was the FNGU, and I could see it came back and it bounced, and VWAP support held as support right there, and you can see the price action went back towards the flat 200, and what I wanted to see it do was to get up and over it and consolidate on top. So you can see getting market direction when you have contracts leveraged, all right, you leverage your money, and you can really make good money in a matter of 2 hours. I took that trade at, if we look at it, I took that trade at 140, and I held most of it right into the close. As we got up towards the tops of the SPY, I started farming some out in case it was going to double top on me. So you can see here's FNGU, and you can see anytime I see FNGU make a higher low, I'm looking for FNGU to make that higher high. That tells me to go to the SPY and possibly look for the next 10-minute uptrend that's also rising up over VWAP. All right, so that's what I'm looking for, right? Because I want to leverage my money. I want to make a lot of money. I want to make it quick. I don't want to be stuck in this all day. I'm looking for that bounce off of that higher low right here off of VWAP back up towards this flat 200. So that's what I'm watching. I'm watching the FNGU. This is where I get my market direction. All right, so what else does FNGU help me with? Well, let's just go take a look at, it's also like in technology. So let's look at the November lows. All right, so let's take a peek here. Here's the SPY. All right, this is the November low right here. And you can see here's the next day. This is when we stopped going down. All right, so what was that day? That day was, we'll call it October 30th, or the October low. Okay, so that happened on October 30th. The market started going back up. Now let's just go take a look at XLK. Okay, so XLK, that's our technology sector. And if you don't know this, pretty much 98% of the time, technology is going to lead us out of a recession or out of a downtrend. Now let's look at XLK to see when it stopped moving down. All right, so we look at that. So it stopped moving down on 1027. Notice that. Okay, so the XLK flinched first. Okay, now let's see who took out the prior high first. Okay, so if we look at this, here's the prior high, 173.29, and we look for the candle that took out that prior high. So which one took out the prior high first? So here we got high up there on 11.6, and I got to say between 11.6 and 11.7, 11.7 took out the prior high, and that placed the XLK in an uptrend because they breached the lower high right there. They made a higher high by coming up over this high right here. So this happened on 11.7, all right? Now let's go back and take a look at SPY. Okay, now you see SPY. Now SPY didn't stop going down until 10:30. All right, so it happened a day later. Now when did SPY take out its high? SPY doesn't take out its high until this candle right here on 11.10. All right, so on 11.10, whereas the XLK, which is technology, had already been there on 11.6 or 11.7. This is 11.10, and you can see here's the SPY is now coming over the top of this high and now in an uptrend, because once it breaches the top of this high, that puts it in an uptrend right there, because it's no longer, it's already made a higher high. So that places SPY in an uptrend on the 10th, whereas the XLK did it on the 7th, as you can see right here. See, here's the 7th. Okay, so 2 or 3 days later, the SPY catches up to it. Now let's take a look at QQQ. All right, this is where you learn technology is always going to lead you out of the downtrends most of the time and out of your recession. So this is the one you want to watch, is the XLK. So then we're going to go take a look at FNGU, see how it performed and when it flinched and when it made its first higher high. Okay, so here's QQQ. All right, so here's the high. So you can see QQQ doesn't make its higher, doesn't take out the high until the 10th, whereas the XLK did it on the 6th. Now let's take a look at FNGU. All right, here's the October low. Now notice the FNGU on the 27th, the same as the XLK, already stopped moving down. See that? On the 27th, we stopped moving down on the 27th with FNGU and XLK. So when does FNGU take out that high? Because that's when it says the downtrend is over and now the FNGU is in an uptrend. So we'll take a look and we'll cross over. And you can see right here on the 10th also. All right, they challenged it right here, but they couldn't break over it. So you can see the XLK performed a little bit better than the FNGU, but the FNGU caught on just as quickly when it came to making lower lows in this downtrend right through there. You can see that happened on the 27th. They stopped moving down. Okay, so you can see the power of watching the FNGU. Now you can see we're getting kind of whippy up here. So this could be signaling a top. If you take a look at FNGU, we've got we had a downtrend because we made a lower high, and then we made a lower low right here. All right, but then we came back a couple days ago and took out this lower high right here, and we made a higher high, so that put us in an uptrend. And then we came back in here and took out this lower low, and that put us back in a downtrend right there. So we took out the lower low, and now we're just kind of waffling and consolidating right here up against 335. So there's FNGU, and you can see how FNGU can help you identify market direction just by looking at the 10 stocks that are inside it. And you don't even have to watch the 10 stocks. All you got to do is watch the FNGU, and you can capture your market direction from that. So for today's trade, what did we take? We took SPY. All right, so my favorite trade is a 10-minute chart. Okay, and I used my anchored VWAP. This is where I put everything together that I learned. I take the FNGU, I take my anchored VWAP, I planted it on the all-time high up here. So here's price action. Now anytime I see price action come in and start to climb on top of the all-time high anchored VWAP, all right, that tells me money is coming into the markets. Okay, I anchor my VWAP, that's the volume weighted average price that institutions paid for shares since the all-time high. Okay, and if they're paying less, that tells me money's coming out of the market. And if they're paying more, that tells me money's coming into the market. Okay, so you can see we gapped up, we filled gap, and then we made a bear sandwich, because the bear would be the meat in the middle, and then we got a bear sandwich, and then what I was looking for right here is follow through. Okay, it's just a bear sandwich until it has follow through. So we're looking for follow through here, and then you can buy some calls, which I did, and ride this all the way up until the 3 crosses over the 8. All right, so I buy some calls and I start selling them off up at the top when price gets far away from my 17 EMA. Okay, this is my 17. This is the 17 EMA is my green dots. Okay, the brown line, that's my VWAP, volume weighted average price. Now this is an intraday VWAP. It's not like the anchored VWAP. The anchored VWAP can be planted on any day and time. Okay, intraday VWAP starts at the beginning of each day, and it's a moving average, and it moves along with the price as shares are traded throughout the day. And when I see price action come back to VWAP, you will see that very often price will come back to VWAP. Like here you see market falls from the all-time high, and then it comes back, and where does it visit? The VWAP right there. Okay, then it falls again, and where does it come back to? VWAP. Now it gets on top of it and consolidates, and then we have a breakout after the CPI. Okay, so we gap up, we come down, we come all the way back up, create the bear sandwich, and then off to the races we go. We make the higher low, and this is where you put everything you got together. Okay, after you make the higher low, what do you say to yourself? There'll be pressure on the bulls to create a higher high. Okay, so I'm looking for them to start that 10-minute uptrend. So here I'm looking at my 10-minute chart. I've got the 3 crossing over the 8 right here. Okay, now I've got my 10-minute uptrend. All I'm looking for now is for green candles to erase or shadow the red candles. Okay, so all I need is for price action, okay, to close on the top of the body of this red candle, or price to take out the wick. One of those two, and I'm in this trade. Okay, because I've got my 2-hour chart. This is where I take my direction from, in addition to the FNGU. Okay, so here's my 2-hour chart. I've got the 3 EMA. I'm going to turn some of this stuff off. Okay, so you can see. Okay, so here's my anchored VWAP. I'm going to turn that off just for a little bit so you guys can see. Right about there. Okay, so now you can see the yellow line. So see that this is the 2-hour chart. Here's the yellow line. The yellow line is the 3 EMA right here. So the 3 crosses over the 8 right here. And now I'm looking for, since the cross, I'm looking for price to rise over the location of the cross. And that's exactly what I get. I get a rise up over. I see price rise up over the location of the cross. That shows me, and we're up over the anchored VWAP. This shows me money is coming into the market right there. Okay, so I got a cross. So I got a 2-hour uptrend. You can see we're making higher lows and higher highs. You can see my 17 EMA is starting to climb up. This is my bullish stack on my 2-hour chart. Price on top of the 3, on top of the 8, on top of the 17. Price on top of the 3, on top of the 8. All three of them on top of a rising 17. Same thing again. Price on top of the 3, on top of the 8 EMA, on top of the 17 EMA, all rising again. Everything is rising. That's what I want. Everything rising up and away from the location of the cross. Right here. Here's the cross. This is the 3 crossing over the 8. Now we create this bullish trap right through here. It's the 3 on top of the 8, and all three of them are up and over the 17 EMA. Okay, so then I look at my 10-minute chart. I'm looking for the same 10-minute stack to happen. All right, price, the 3, the 8, all up on top of a rising 17 EMA. And that's what I'm looking for. The bullish stack inside the 2-hour chart bullish stack right there. And that's the trend I want to play because why? Because the market's in an uptrend. You see the market? See how the 17 keeps getting higher and higher and higher as price keeps climbing higher and higher and higher. Now we go look at the FNGU. Okay. What do I want to see in the FNGU? I want to see a 2-hour uptrend. Okay, I got the 2-hour. See, I got the 2-hour cross right here. That's what I want to see. I want to see price action moving up and away from the location of the cross. What else do I have? Also have a 10-minute cross combined with a 10-minute stack. Price, 3, 8, all rising up and away from the location of the cross. Okay, on top of my 17 EMA. All right, price makes a higher low. There'll be pressure on the bulls to produce a higher high. Failure to produce the higher high could result in a challenge of the recent low. Okay, notice they got the job done right there. Okay, we'll go back to SPY. Okay, notice they got the job done right there. Higher high. That's what we wanted. We wanted to get up on top of this and consolidate. Okay, so what did we want from FNGU? We wanted it to get on top of the 200 and consolidate. See price action getting up on top of there. Didn't quite get up there fast enough to consolidate, but you can see in the aftermarket hours it is consolidating up and over the 200 SMA. Okay, that's the SMA. These are the EMAs right here. This is the 17 EMA. Hey, Kevin. So that's the FNGU, and this is how I use it day after day to determine my market direction. All right, so I want to see if the FNGU is performing like this. This gives me the courage to buy contracts in either SPY or QQQ. I like SPY and QQQ because they're highly liquid. Okay, they got options with plenty of open interest that expire on Fridays. I like my options, my directional options to expire on Fridays because I want plenty of liquidity so I can get in and I can get out, and I don't want a lot of slippage. All right? So that's it in a nutshell right there. That's why I trade FNGU, because everything in here seems to be the heavyweights inside of our ETFs like SPY and QQQ. For this, I find it very valuable in finding market direction. So we'll see what happens tomorrow morning. We're looking for price action to take out this high. Now, if you want to see the trade that I took, I will play a video for you. What is the thick red line? That is the 200 SMA on a 15-minute chart. All right. Now, I don't have a slide presentation to hand anybody, but I have placed up here, if you scroll this down, my YouTube channel where you will find this video if you want to review it ever again, or flag it or star it as one of your favorites. It will be in my YouTube channel right there. Okay, what else do I got? I've got my email address, if you ever need to get a hold of me, is right here. Feel free. You don't have to be a member to email me. Right here. And I think Ed put in a, if you're not a trial member, you can join for, I think, $24.50. There is a link so you can pick up a trial for $24.50. So here's my email address. If you have trouble finding that link, I will point it out to you right now. Let me just scroll back over. And there it is. Oh, thanks, Ed. Okay, so you got that, Malcolm. So the signal on the 2-hour chart is the first green light, so to speak. Yeah, does it carry over into the next day? If it stays green, as long as that 2-hour trend is still bullish. Okay? What I like to see, what I really like to see when I want to hold my stocks overnight, or my securities, or my positions overnight, I like to see price action close at the end of the day near the high of the day. Okay, that gives me the courage to hold my long positions overnight when I see price action close at the end of the day near the high of the day. So making that higher high, consolidating on top of that, gave me courage to hold my long positions up there. So we'll see what happens. Right now we're just in the post market. Anything can happen tomorrow morning, but I think this continues up. I think the market wants to go to 520, but that's just an opinion. It does not mean it's going there. All right? But I do think that the market failed to make a lower low right here. Okay, so I'll put the arrow in. So we have a low here. And if you look over here, we failed to make a significant lower low after making this all-time high. So what is the market most likely going to do? It's going to run back and challenge the prior high. As you can see, we're on our way already. So I think we're going to be up here challenging the prior high. If not, if we get over this, I think there's a good chance we're going to 520. We'll see what happens tomorrow morning. So far, the FNGU is on top of the flat 200. That's a good sign. All right, so I don't have, let me pull that up with my moving averages. All right, and we'll go to the 15. And you can see here's the flat 200, and price action is up and over it. We'll see how it opens up tomorrow morning. But that's a good sign. Hanging out up here, they could start climbing up these breakdown candles right here. So we'll see what they want to do tomorrow morning. So far, we got the higher low. They've made a higher high, but I don't think that's where they want to stop. I think they really want to move up and challenge this high up here before leaving this area. So we'll see what happens. All right, so I'm going to play a little video for you guys, and you'll see what I did today. Well, yeah, I dropped down to the 10-minute to enter my call position. I'm looking for a 10-minute uptrend, but I'm looking for that 2-hour bullish trend to hold. I want to see price action continue to rise up and over that anchored VWAP. I want to see continue to rise up over the location of the 2-hour cross. It's important that it keeps rising up over the 2-hour cross. Here's the location of the cross. If it flattens out, it's not going to be any good for us. We need it to continue to rise. So we need to see candles that make higher highs and higher lows and don't stop. Trend on multiple time frames. Yes, I have it on the daily, on the SPY. You can see on the SPY we have it on the daily. All right. You can see that's definitely an uptrend right through there. You got it on the 2 hour. You got that right there. See if I can blow that up a little bit. Yeah. But you get the 2 hour cross right there. So we have a 2 hour uptrend, and we have it on the 10-minute. And you can see it right there. 10-minute uptrend. Usually when this 10-minute uptrend starts at about 2 o'clock or 1:30 or 2 o'clock the previous day, it'll sometimes carry into 12:30 the following day. Okay, so you can see we got our Fibonacci pullback. So now I'm looking for price action to take us up into the end of the day. Bob says 30-day trial has blocked me. I will try later. Just my security. Love being a part of John's membership. Thank you, Bob. Thank you. If you want to contact somebody, Ed, if you haven't taken a trial in the last 3 months, I think you are eligible. I'm not sure if it's 3 months or 6 months, but talk to Ed about getting another 30-day trial. I'm not so sure how soon you can take one, but he would know the answers to that. Love to have you back in the room. And Matt says, any concern with SPY options, P&L going all over the place? My P&L, yeah, I do a lot of spreads, and they give me credit for the securities that I sold, and that's why it rises and comes back down. It's so Ed says it's 6 months. I'm looking. He's going to let you know. All right. Thanks, Ed. Does that answer your question, Matt? Yeah, when I do spreads, they give me credit, and then when I get out of my spreads early, they take it away. Does that help you, Matt? I hope that clears things up. All right, going to play a little video here so you guys can see that. I think it's an awesome, it's a little 5-minute video, and I'm going to take questions right after the video. All right, so I want you guys to watch this. I think there's a lot of information here, and I think you guys are going to enjoy it. Not that you can't watch it anytime, but I do both. I do spreads and directionals, Matt. Yes. So I'm going to play this. All right, you can expand it. Okay, traders, we have a classic 10-minute uptrend. All right, so what we look for, I look for a 2-hour chart. This one's kind of busy. I'll come back to it. I'm looking for the 3 on top of the 8. And I'm looking for all 3 of them, the price action, the 3 and the 8, to be over a rising 17 right there. Okay, this is the all-time high anchored VWAP. You can see price action is up over the all-time high anchored VWAP. That's this pink line right here. Okay, that shows me money is coming into the market. So now I flip to my 10-minute chart. I'm looking for a 10-minute cross. Okay, as soon as I get a candle that closes above the body of this red candle, I want to see green wipe out red. All right, as soon as I get a candle over that, that's my entry. All right, either the candle closes over the body or price takes out the wick. Either one. But those are my 2 entry methods. All right, I need the 10-minute uptrend. That's the 3. again on top of the 8. All right, all three, price action, the 3, the 8, all over the 17 EMA. I want to see the 17 EMA rising up over. Okay, so I got a 10-minute uptrend. So I got my 10-minute stack. I got my 2-hour stack. Okay, got a 10-minute stack. I got a 2-hour stack. Stack is price 3, 8, 17. All moving up. 10-minute stack. Price 3, 8, 17. All moving up. So I take my entry right here. Which one do I which call do I want? I take 50% of this, so call it 250. If price action is at 515.20, I'm looking for 512 calls or 513 calls. All right, and I want them to expire on a Friday. And that's my entry right there. All right, so I just take my 512 calls. So I bought 20 of them, and as price, close this candle over the body of this candle right there. Now you can do it on a 5. As soon as the 5-minute candle closes up over the body of this red candle here, or price takes out the wick. Okay, there's another entry method. So I purchased 20 calls, 10-minute uptrend right through here. So I'll stay on this until the 3 crosses over the 8. All right, now if he crosses over now, well, then it won't make much. Probably wind up with a small loss. But it's only 2:10, so I'm looking for this to run till about 3:30. We'll see what happens. But we're back up here challenging the prior highs. So I will take some profit as price ascends into the prior highs, just in case it wants to double top on me. And that's my 10-minute uptrend trade right there. Now what do I have on my side? My technical indicators. This one, T2122, not on my side. This is it's in the buyer's chop zone, but it's not in the buy zone. So that's not on my side. T2123, green, and it flipped from red back to green. So that is on my side, T2123. FNGU, up, back to VWAP, and then taking off and bouncing off of VWAP, probably back to this flat 200 right here. So FNGU is on my side. All right, so I'm looking for FNGU to re-challenge this flat 200 or climb on top of it and consolidate. That's what I'm looking for. Back to my chart. It's 10-minute uptrend. Now into the rallies, I farm out shares up above and reload them right back at the 3. All right, so that's what I do. So I got some SPY calls. I got 20 of them. See if I can load them in here. So there's my SPY calls. You can see I bought 2. I farmed 1 out. I will reload back at the 3. Here's another one up here. So I'll sell 1 off at the 25. See if I can get it to take it. And then I will reload it back at the 3 as we come into these prior highs. You can see I'm already up $700, $900 as price shoots into this high right here. And that's it. That's my 10-minute trade. All right, traders, you guys see that? So I'm going to take questions on it. Okay, let me take this off. All right, I'm going to blow this up, and we're going to go to my other chart, and we're going to get to the 10-minute. You can see how far it went. All right, so when price gets high, up, and away from the 3, I sell a contract. When it comes back to the 3, I reload the contract. When it gets back up on the next candle, up and away from the 3, I unload a contract. When it comes back to the 3, I reload it. And I do this as long as this trend continues to climb and make highs like this. Okay? So when you look at my trading, when you see me trade, you'll see I unload, reload, unload, reload, unload, reload, unload. That's all I do. Unload, reload on every one of these. When the wick gets up there, I'm farming one out. I'm trying to farm one out at the high and reload one back at the low. That way I'm carrying, so I'm taking profit as price goes up, but I'm also able to arrive at my destination with a full boat. That's what I'm looking to do. Okay? Price gets away from the 3, I unload one. Price comes back to the 3, I reload it. If it comes back to the 8, I reload 2. If it comes back to the 3, I only reload 1. Sometimes when I'm feeling very, how do I say it, aggressive, I reload 3 at the 8. If it comes to the 17, I'll get 6. Okay? Up here, unload 1, reload 1. Reload 3, reload 6. Unload 2, unload 2, unload 2, reload 1. See what I'm doing? Okay, that's what I do all day long. I'm like a market maker. I play right alongside with the market maker. The wicks go up, I unload, come back to the 3, I reload. That's what I do all day long. All right? When you're in my room, you hear me. I don't talk, but most of the time, if you watch over here, you'll see that's exactly what John's doing. He's taking the same contract, he's unloading it, and then he's reloading it. And that's how I trade. I take this 10-minute uptrend and I ride it for all that it's worth. Everything I can get out of it. All right? Until that 3 crosses over the 8. Hopefully it never crosses and it carries on into the next day. I love that. Okay? Is reload exiting and re-entering? No. If I've got 20 contracts, I unload 1 or 2 and I reload those 1 or 2 back at the 3. Okay? I'm not ready to unload all 20. Okay? I don't do that until the 3 crosses over the 8, Matt. All right? I'm only doing 1 or 2 up here. Okay? When it comes back to the 3 EMA, I reload 1 or 2, not 20. Okay? I just unload 1 or 2. I want to arrive at the destination, okay, with a full boat. Okay? I want a full cargo ship full of, inventory when I get there. That's what I'm looking for. Right. I started with 20. That's right. And as it goes up, I unload. And when it comes back, I reload. Up, unload. Back, reload. Yep. I started with 20, and I just continually unload. Now, there'll be times, Matt, where it just takes off and it never gave you the opportunity to reload. And now you're stuck with 19. You know what? Who cares? You made money on that one contract. The other 19 are going higher. That's the breaks. And I'm prepared to deal with that. Yeah, you know what I'm saying? As long as it wants to go up, I'm a happy camper. Okay, Don asked a question. If the red candle was red, I'm going to just interpret that as red. Would you have gone in right away, or would you have waited for the third red candle? I'm going to need some help, Don. Okay. If the red candle, this red candle or this red candle? Just say the first one or the second one. First one, second one. Number one. Okay, if the first candle was, I have to wait till for me, I want to see the body of the green candle close over the body of the red candle. Okay? That's what I need to see. Either that, or I need to see price take out the whole candle, the wick and everything. Price just rises up over there. Either one of those are usually my entries. Does that help? Don, did I clarify? It's not a rollover. Okay, Don's got it. All right, so next question. When you are exiting, are you using a market order or a limit order? I like to farm them out 1-2 cents over the ask. Remember, I want to hit the top of these wicks, okay, when it's far away from the 3. So I'm farming them out so they run into them. I want them to walk into my trap, so I'm farming them out up here. With I'm offering them, okay, 1 cent over ask, 2 cents over ask, 3 cents over ask, and as they run into them, I let them run into them, and then when they come back to the 3, I try to reload them best I can. Okay, so I'm offering them out. So it's not a market order, it's a limit. Yeah, it's a limit offered out 1-2 cents over the ask. Does that help, Sue? You're welcome. Yeah, that's what I'm trying to do. Now, when they come back here to the 3, I try to use a limit order where I'm bidding for them, but sometimes I don't get it, and I may just hit it with a market order because it just happened to be lower than the one that I just took profit on up here. Okay? Okay, is the bear sandwich and the bear sash the same thing? I don't know what the bear sash is, Stefan, but it's a bear sandwich to me. You can't see it, all right? I'll explain the bear sandwich because this is important. I think y'all should get this, okay? Because this might help you in the future. All right, so the market gapped up. So there's an invisible green candle right here, okay? You can't see it, but it's in the pre-market, okay? So there's an invisible green candle right there because the market gapped up, right? You can't see it, but it's there. That's a green candle because the market gapped up. Now, the bears came in and filled the gap. But the bulls came right back. After the bears filled the gap, notice they didn't get any follow through. Okay? I'm really surprised the bears let them do that. The bulls let them fill the gap, which kind of gave me a little hesitation going through here. Okay? Because the bulls let them fill the gap. They shouldn't have done that. It would have been nice to see the bulls stop them from filling the gap. But the red candle is the meat in the middle, like a peanut butter and jelly sandwich. The peanut butter's in the middle. Well, the bear, that would be the red candle. The bear is in the middle, so I call it the bear sandwich. Okay? Other people call it the Fig Newton. I get it. It's just, that's the way I learned. That's the way it was taught to me. Whatever the meat is in the middle, that's what it is. That's a bear sandwich. Okay? Hey, Stefan, right? Okay. Yeah. Ever use zero DTEs? Occasionally, yes. I don't advise it. They decay. The price decay on a zero DTE is incredibly fast. Okay? You need price action to really be moving for the zero DTE. You know what I'm saying? You need price to be going up. It cannot be just waffling around. Let me take this off. You can't have it meander like this because it won't move up fast enough because the price will melt faster than this is moving up. Okay? Price will decay faster than this is moving up. Okay? So the 0 DTE will not work right here. You see where it takes 4 hours to move $1.25? That doesn't work. Okay? Unless you're very good at clicking the tops and the bottoms. And even that's hard to do on the 0 DTE. You need, on a 0 DTE, you need this. You need that blast off there, okay? So consequently, I don't know if I'm going to get this or this. So because of that, I kind of steer clear of the 0 DTEs, unless, of course, I can see that I'm going to get this. Right? It's hard to know what they're going to do. You know they're moving up, but at what rate? Okay? If you see them just melting up, price will decay faster than it melts up, and you could get stuck with actually just, taking a loss. So, yeah, like Malcolm said, 0 DTE is like a lottery ticket. Yeah, Kevin closes his by noon. See, he already knows. After noon, this thing's going to decay like a snowball on Miami Beach in August. Right? He knows that. That price is just going to melt. By 4 o'clock, there won't be any snowball. All right? So, you guys saw where I entered, right? You saw you saw my management. Okay? Farm one out, reload it. Farm one out, reload it. Farm one out, reload it. You don't have to do what I do. You can just hold the whole boat till the 3 crosses if you want to. Okay? Either way, okay? This is just the way that I trade. Okay? You don't have to be me. You can just hold the boat till it gets to the destination and then, sell the boat. That's just the way that I trade. That's all there is. I like doing it my way, and you might like doing it your way. Either way, try to get to the destination with a full boat. And don't forget to take profit along the way and move your stop up. Now, on the stop for this candle right here, my entry was right here. My stop goes right underneath, 10 cents, underneath the red candle that it just erased. Okay? Because I know a lot of you are asking, where does your stop go? Your stop goes 10 cents. Well, my stop goes 10 cents under the bottom of that red candle. If price, takes out the 10 cents below this, then the whole trade is corrupt. I don't want it anymore. Okay? If price reverses all the way back down and takes out that low, I don't want it anymore. Yes. Let me blow this up. Okay. I took my entry at, I'm going to drill down to a 3-minute. I took my entry at 140. Okay. So I'm just going to blow this area up. Okay. This is 130. 133. 136, 139, right there. This candle closed over the body of the red candles. Okay, that's right here where I enter. Right there. Right after that candle closes over the top, I took that. Then when price took out the wick, I put my other 10 on. So I took 10 here, and then when I saw price action erase the red wick, I put my other 10 right there, not long after. All at 140, right there. And I took in the money 50% of my 10-day ATR. So if this is 492, half of that's 250. So I'm at 515.25, 515.50. I want my 512 calls. I want to be in the money by 50% of the 10-day ATR. Yes, Gamma goes bananas into the close. That's exactly right. If it's moving fast, all right, I will manage on the 15. I prefer to manage on the 10 so I don't lose as much profit. But then again, I might get flicked out. So on slow, choppy days, I recommend managing on the 10 and take quick profits. On fast days, I recommend 15-minute for management. But, I don't mind doing it on the 10 either. Sometimes I'm always taking profit anyways and reloading it. Am I using Heikin-Ashi candles? No, I do not. And I've got nothing against them. I like my 10-minute chart, Carol. I like this. For me, I get excellent clarity. All I want to see is price continue to make higher highs and higher lows. Hey, before you go, some of you already left, okay? I wanted to go over one thing. All right. I want to go over one more thing before you guys take off. All right. Okay. I don't know if you guys have been following me on my YouTube channel, but this is an MMRP. All right. This is an MMRP right here. Okay. Price is coming down. How do I know price is coming down? Because I'm going to go to the 15-minute chart. Actually, I'll go to the 30 and you're going to see it. All right, so I'm going to go to the 30 so you can see it. It's all the way back here. Okay, price is coming down, and then we rip up. All right, so this is an MMRP right here. We see how we break over the resistance. See these hills? The hills, that's resistance. Okay, we break through the resistance right there. Okay, that's on the 22nd. Now watch this. 2-day. All right. Right there, 22nd. See, we rip. This is the igniting candle. It breaks. It was going down. Remember I showed you. And then it reverses direction. And it breaks through the resistance that was right here. Okay? It breaks through the resistance. Believe it or not, you're still in this 2-day MMRP. All right? Igniting candle. Pause candle. They're stunned. What just happened? Oh my God. Did you see that? We broke through resistance. I can't believe we just made a brand new high. Okay? They're stunned. Okay? 2 days for pause. Okay? Then they check for support. All right? Okay, let's go see if this resistance we just broke through is going to hold as support. So they come and they check it, and it holds. Then you get price advancement candle 1. Makes a higher low and a higher high. Price advancement candle number 2. Makes a higher high and makes a lower low, but does not break the base. Price advancement candle 3 makes a higher high and a higher low. Price advancement candle number 4 makes a higher high and a higher low. Guess what we're on? Price advancement candle number 5. This can go on for 10 or 12 candles. Okay? I play the pattern until it's done. Okay? Makes a higher low. What do you think is going to happen tomorrow morning? I'm looking for this thing to make the higher high, right? That's what I'm looking for. That's why I'm holding my calls. I'm looking for the higher high right into this. CJ, see my question. I will take a look right now at 850. Going back. 850. Someone said blue candles. Oh, the blue candles are aftermarket candles, John J. I'm going back, CJ. Can you review 50% of the ATR? Okay, 10-day ATR. CJ, you got TC 2000? I think you got something different. I can't see. You do. Okay. You know how to set it up? To set it up, you just right click, edit toolbar, you hit the plus sign, all right? And then you don't even have to, you just type ATR and it comes up right there, okay, in case you don't have it. All right. 50% of the 10-day ATR. So the average true range, all right, is $5. Just round it up to make it easy. Okay? 50% in the money. Okay? So if price action's at 517, my 10-day ATR is 250. I'm going to want the 514 calls or the 513 calls. I want to be $2.50 in the money. So I'm going to want probably the 514 calls. That's how I determine. I don't want to be too far away from the price action, but I don't want to be right on top of the at the money stuff. You know what I'm saying? Okay, I want to be in the money by 50% of this 10-day ATR. Okay? I don't want to be way back here at 490 because that'll be too pricey. But I don't want to be right on top of price action. I want to give it room to breathe. So I take, that's my rule, 50% of whatever that is, I want to be in the money. So if they're calls, okay, I want the 514s. If they're puts, I'm going to want the 520s. Yeah, in the money. Yeah. Yeah, well, it moves around. It can go up to $7. I've seen it up around $7 sometimes. When the market gets ripping or it gets whippy, it can get up there. Most of the time, it's very consistent. You know, it's right around here. For what it's worth, thanks, CJ. How long have I been focused on SPY options? 2 years. 2 years. Matt, Stefan. How do I make the dots? Stefan, I'm going to teach you that in the room tomorrow morning, but it's all it is taking my 17 EMA, all right, and right here, my 17 EMA, I take this and I want it to be dots right here. See, plot style dots. Right there. I can make it dots by doing that. I could have a line, a histogram, an area, but I choose to have dots so I can find it immediately. I don't do spreads in. I don't do spreads. I do spreads like way away. I like to have my spreads like I picked up SPY spreads yesterday. Actually, at the close, I picked up the 510s into the close. What did I sell? I think it was, I sold right here. I sold the 510s and I bought the 506s. That's for tomorrow because I think that this is going to go make a new high. And I think I'm protected. I don't think it's going to come back $10 after making the new high. And I've got the bottom of this candle to protect me. So unless this is bearish engulfing, I should be fine with my bull put credit spread. Well, I use them. I use them all the time. I think we're at a spot, Matt, where the price is going to probably consolidate underneath 520. That's like one of those target numbers. 550, 520, 580. Those will be numbers. Those are typical numbers where price will either consolidate under or just on top of. So we're getting to a point where price may consolidate around 520. And during that consolidation, I find it more beneficial to sell time than it is to buy directional. Yeah. Spreads to pay for the directional. Well, I mean, I want protection underneath here. I'm just selling time. I use spreads to sell time. Where I think price is going to stop and have to consolidate for a while, that's where I use spreads. Yeah, I just want to sell time. All right, traders, that's it. Okay, me and Ed, we got to go to bed because we got to get up early. All right, everybody. So, yeah, you got my email if you want some more questions. And let me render my video, get it posted. Okay, I hope you all enjoyed my little video for today. Thanks, Matt. Thank you everyone for showing up and staying, because I think if you listen to what I say, you can make a lot of money using this strategy 2 or 3 times a week on some SPY options or some QQQ options. It's all about getting the direction right. All right? Thank you, everyone. Everyone have a wonderful evening. Thank you.